All right, hey everyone. Let me adjust this here. Okay, cool. This should be all right now. All right, Mark here, Mark Pre-Markets. Thanks for joining me for another Bitcoin trade session here. We're going to take a look at the day trade time frame, but I wanted to spend a little more time talking about the trade management for the swing trade that I put out over the previous Wednesday. Okay, so there's some important learning lessons in that. So let's get this thing started right away, shall we? Okay, so this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, now, so real quick, let's talk about this. Oh yeah, and by the way, if you're interested in my training or anything like that, you can go to markpremarkets.com and you can learn more about it there. Also, I have a free Discord area. There's a lot of valuable information in there. There's a link in the description. You should seriously take the time to check that out. Okay, now, since I'm in the announcements real quick, I just want to mention a couple of things to people here. I am going to send out my student meeting link. I haven't sent it out yet. I mean, it looks like I'm going to have to push it to next week. I don't like doing that right into the holiday, but I don't think I'm going to have much of a choice. We'll see, but I will get a link out there, and I'm going to have a meeting just for my students. Okay, I can answer just student questions. Also, I'm going to make some adjustments to my streaming schedule here. I'm not going to be able to, like this streaming schedule that I'm on right now has not proven to be very productive as far as my situation is here. So I'm going to have to make some adjustments. First of all, for week 4 of this month, there's probably not going to be a whole lot to talk about as far as markets go. Okay, it's usually a very bad time to trade, week 4. So I'm going to take the entire week off. I'm not going to have any streams on week 4. That's all of next week. Okay, so I'm letting you guys know now, no streams. I'll remind you again, but next week I'm going to take off. I need to use that time to catch up on other things like my general YouTube marketing effort and all that kind of stuff. So I need to spend time on that. And so I'm not going to stream next week. Anyway, like I said, it's not a good time to trade anyway. You should take the week off. Okay. It's like the 3rd and 4th week of August. There's no point in putting on trades or trying to manage risk in an environment that's going to be usually not very eventful. All right. So that's that. Also, so in the beginning of the year, I'm going to have a new streaming schedule. Okay. Something that makes a little more sense, something that's a little more practical. So that will allow me to produce content that is more valued by YouTube. This content is not valued at all. All right. So anyway, so with that being said, let's get started with the analysis here. And so it's just hello to my regulars. We got Bill, we got Elijah, Han, Stacy. All right, good to see you all. So the first thing I want to talk about before we talk about the day trade situation is I want to talk about the swing trade, right? Now I wrote about this in my TradingView article yesterday, and you guys know, I've been talking about this area where I drew this rectangle here. I've been talking about that area for weeks and weeks and weeks. Okay, these are all the weeks that I was talking about it. And there was really nothing to do in Bitcoin as far as swing trades go that entire time. So anyone that was calling anything in there was just basically pulling your leg or fooling themselves or whatever, okay? Or basically just showing that they don't know what's going on in the world. I waited patiently for this level. Now, I'm not short Bitcoin, okay? But I said I was going to share the idea if the market aligned, and it aligned. We had the test of the area, right? Not exactly at the line, as you can see, but we got the setup. All right, the setup occurred on Wednesday, and this was after the FOMC meeting, right? This candle closed after the meeting, after the meeting in the press conference, and I put the sell signal out in the server, in the signal chat, okay, in the signal channel. So, and that was at 17,595, okay? And that went out around 8 p.m. that night, something like that, or 9 p.m. I forget the exact time. Since then, it's been doing okay. Now, let's talk about the trade management because that's really like the key thing. First of all, it pulled back into an area, right? The highly random midpoint area, right? This is like the 1600s, that area right there. And that is an area, for one, if you're not short, this is not the place to short it, okay? This is not the place to chase. Now, you may get a continuation pattern going lower. You have the inside bar from yesterday, right? I mean, look at that nothing candle. Anyone that was calling this, I mean, you have to be a moron, all right, if you're calling any kind of swing trade there. Anyway, that's an inside bar, and the high and low was taken out. So it's just meaningless price action. It's just noise. But the thing is, this thing takes out like this low right here, you're going to have a continuation, a bearish momentum continuation sell signal. That's great if you're in the swing trade short, okay? Because that momentum will likely take it straight to the target. So that's reaching the target. I'm not going to mention the specific target price here. You can become a member to find that out. But the target price is definitely within reach, and that can happen this week. Now, we don't have anything heavy on the economic calendar. I mean, we have what, Bank of Japan interest rates, and we have what, GDP, US GDP, and I believe durable goods. Those are like the main reports this week, and those are not typically heavy, meaning they're not like the FOMC, they're not like NFP. So I don't know. I don't expect much from those, especially we're going right into the holiday. Okay. I mean, by the close of this week, when is Christmas? On Sunday or something? You better believe after Wednesday, the market will be, the game is over pretty much. Like after Wednesday, volume just dries up. No one's interested. Not a good time to be putting on trades. All right. So I'm just letting you know. That's you could possibly see slow grinds one way or the other, but we're not in like stellar bullish mode like we were a year ago. You know, everything was going nuts a year ago and everyone was happy and everyone thought this was going to continue. Usually when you get that kind of optimism, that kind of environment, you'll see a slow grind in the holidays. You'll see like these slow grind bullish trends, and then you get stuck shorting them because you think, oh, it can't go much higher, that kind of thing. I don't know if we'll see that this time, because the interest is just not there. Okay. Now, but again, I'm guessing, but we'll see. Expecting something spectacular is probably a very low probability outcome. Let's just put it that way. Now, if we get the momentum continuation, great for reaching the short target, and that's a great thing. Now, what I want to talk about, the main thing that I want to talk about in this stream here is the stop adjustment. Okay. So, hey, Ben, good to see you. And Jeff, okay. So I put out on Friday, move the stop to break even. Let's just put that on the chart here. So this is 17,317. Let's see, 595 is right about here. Okay, right up in this area right here. That's 595, right? Something like that. So as you can see, that's where your stop should be if you took that trade. And let me explain that a little bit. Now, the market, it's always possible that the market may find buying activity here. You may get a conflicting signal. We don't have one yet. This doesn't count as a conflicting signal. So especially since the high of this pin bar, this is not exactly the best example of a pin bar, but that high was not taken out. So you have no conflicting signal. And now you have this red candle. And if you look at Bitcoin on the weekly chart, it looks even worse, right? I mean, just take a look at this real quick. That's a sell signal. Look at this pin bar on the weekly, right? That's a weekly pin bar, and we're fooling around near the low of it. Plus, we took out the previous week's low. Nothing but sell signals here are basically bearish, a bearish look. This is certainly not what you want to see if you are long. Definitely not. So, with that perspective, I think the price target is very reasonable to be reached, right? Which would be a nice trade. Now, again, what I want to point out is this: the stop is at break even, which means this trade is risk free because, and I have to point this out, I wrote about this profit area, right? That's your profit right now. That's not your money, all right? Until you close the position, that's not your money. It's the market's money. So if the market takes its money back, all right, and you break even on this thing, well, you don't lose any of your own money. That's the whole idea. If you think otherwise, then you have a problem with greed. And if you have that problem, the market is going to educate you, not me. All right. And the market's very expensive and it doesn't offer any refunds usually. So that's one way to look at this. You can move your stop to break even and then let the market do its work. Now, as far as the price target, which again, I'm not going to mention specifically here, if it goes straight to the price target and does not produce a conflicting signal of any kind, there's theoretically no reason to get out. So what I would suggest in that situation is take some money off the table, right? Let's just say, for example, you have 2 lots, right? 2 contracts on or whatever. Close one at the target. So you've locked in a good reward risk, 1.5 to 1. And then you can let one ride and see how far it wants to go. This thing may go to 15,000. I don't know. The thing is, you give the market the chance to pay you more if it wants to. And then you can just exit that second one on the conflicting signal. Whenever it shows up, you can just start trailing your stop. All right, now trailing your stop is tricky in this situation, okay? Usually what I like to use is the highs of previous candles. But when you get tight like this, usually you get stopped out, okay? So, I mean, you could move it to the high of, 516. That would be this high over here. And then if this thing breaks, you could move it up into this area over here. You could move your stop and just keep manually trailing your stop. At some point, you're going to get stopped out. But the idea behind that is letting the market pay you more if it wants to. Now, is that a function of greed? No. If the market wants to pay, why not? Let it pay. Let it do its work. Greed comes in when you have an opportunity to take something and the market is showing signs that it's going to take the money back and you stay in anyway, right? That kind of thing. So you want to let the market pay you if it wants to. Now, the argument on that side, we just looked at the weekly chart, right? So the weekly chart supports bearish price action. And as we know, the general trend on this thing is bearish. That hasn't changed. So a lower low is likely to be tested. So my point is, be smart with your trade management. If the market wants to pay, accept that payment. Let it work more. Now, if you only have one contract or you only have one unit on and you don't have the luxury of locking in some, all right, let's just say you're in that situation. What to do? Well, in that situation, again, just trail the stop, work with your one and see where the conflicting signal shows up. But my suggested target is there for a reason. So if you only have one, right, and the market hesitates there or it gives you a hard time, it would be a good idea to lock in that profit, okay? It's 1.5 to 1 reward risk. There's nothing wrong with that. If the market goes further than that, after you get out, for whatever reason, you can't feel bad about that, okay? So only you can decide how you want to manage that situation. If you want to be more aggressive and you want to see how far the market can go, you can just trail your stop or leave your stop at break even. And at some point, if the market has a spike, you get knocked out. Hey, well, you say, well, I gave it a chance and I gave back all the profit. Okay, it's the market's money anyway. That's very aggressive. But by doing that, you give the market a chance to make a broader move. Keep something in mind. The idea in this game is not to capture home runs. Sometimes the market delivers one, but they're rare. The idea is to capture a greater reward than what you risked, okay? So that's why at 1.5 to 1, you've achieved that objective. So I'm just giving you a few options here, a few ideas to consider as this thing starts working its way lower, because that's what it looks like it's poised to do. Does that make sense to you guys? Does that make sense? Any questions about that? So I spent some time here with the stop, talking about the stop adjustment, because I want to give you a couple of perspectives and basically how to manage your expectations throughout the price action and as it changes. Right now, it's looking good for shorts. Nothing to do. Your stop's at break even. It's a risk-free trade. There's nothing to do. Okay, risk-free. This is like the best situation you could be in when it's risk-free. If you missed it, like I said, this is a really bad price to get in. Even if it continues lower, this thing can easily reverse and fool around a bit. And there's no point in taking all that risk. Okay, the risk is too high now. You missed it, you missed it. If you're in it, you have the luxury now of just letting this thing do its thing and see if you can, see how to manage this thing once it gets to the price target. Okay. All right. So now with that being said, let's revisit now our day trade situation. Okay. And let's take a look at this on the day trade time frame and see if there are any setups worth talking about. So we're going to start here with the 30-minute chart. And before I do that, hold on. Before I do that, I want to just show one other thing here. All right, let me know if you guys have any questions. I want to show you the NASDAQ, okay? NASDAQ, look at the NASDAQ. So we talked about this. Again, this is all the results. I just want to point out here, right? We cleaned through the support. Bad for longs, and I warned you guys about that, okay? We had, what was this? This was over here. This was CPI, right? From the week before. This was the previous Tuesday, CPI, followed by the FOMC meeting right here, okay? And then since then, it's been nothing but garbage. Now, look at this. I want to point this out too. This candle over here, for you people who don't remember, that was the Chairman Powell speech that we had a couple of weeks ago, where he came out and said that they were going to adjust rates at a lower pace or whatever that nonsense he said. Now, it's just my conspiracy theory thinking, but I think they come out and they say things like that because they know that the market is weak, right? And they're just basically trying to buy time, meaning they get the market up to here, right? It rallies a bit. It finds some sort of area where they're just buying time, because if he never came out or if he said something bearish here, the market would probably be here right now or something like that. Does that make sense? So I think they do that just to promote temporary, let's just keep people happy temporary. Otherwise, this market's going to be pushing lows. Like they hold it up a bit, even though right now it's selling. This could have been in a much worse location if he had never come out and said that, or if he said something that was not so bullish. But look at the nonsense, okay? Look at the nonsense. If you believe government officials, and he works for the government, they can't lie that much. They can say whatever they want, okay? It doesn't matter what they say. What matters is reality, and reality we learn from price. So the NASDAQ's getting hammered, broke that support, and the next area is likely to be revisited is around here. That's a pretty significant support. And this area up here is a lower high basically now. So we take that out, man, this thing's just not looking good. All right, it's not looking good. Not very encouraging, I understand, but it means that we just have to be more patient, and there are better investment opportunities coming because we're going to get better prices. That's why you don't go big at these ridiculous levels where it's just all talk and nonsense. Does that make sense? All right, so now that I have the NASDAQ up, we're going to move that to the 5-minute chart, and we're going to compare. You know how I like to compare the two. We're going to look at the 5-minute price action for the correlation, right? This is the NASDAQ on the 5-minute. Look at that, just bear, 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 okay? Look at Bitcoin. Bitcoin has been basically consolidating in this range, and now it's selling off a bit. This is a 30-minute chart. It's not a 5-minute chart. So the point of the 30-minute chart is to get a sense of context for day trades. And I mean, look at this level up here that I had pegged. That's been there for since a week ago or whatever. It's still a resistance. We're going now into these support areas right here, right? The range low supports. You see that? But this is going to be a zone because you have an area. You have this area right here. Here, let me re-highlight that. We have this area right here. Okay, and then we have this area here. These are zones, right? So those are the support zones, and we are in a range right now. So even though the NASDAQ looks ugly, right, this is still a range for Bitcoin. So if the NASDAQ continues to sell and Bitcoin manages to find support here and does not make lows with the NASDAQ, that means it's acting relatively strong. And that's a location for a bullish reversal as a day trade. So if I can make 100 points out of that or something like that, it's worthwhile, right? That's the whole idea behind a day trade. So now we're going to go to our 5-minute chart here on Bitcoin, and we're going to evaluate here the price action. Now, these charts don't look the same at all. I mean, look, NASDAQ just getting hammered. Now we're looking at 5 minutes. Bitcoin had this, whatever this nonsense was. And then it's like, oh yeah, right, the NASDAQ's going lower. I can't go higher, right? And then we're here. So this price action tends to be, it's very erratic. But the point is this, we know our areas, right? So in order for me to do anything with Bitcoin right now, either we have to be at the range high because this is not a trend, right? So I want to see either the range high or I want to see the range low. Anything inside of this overlap area is going to be nothing but a waste of time. So let's go now to the BTC perp chart. Okay, let's go to the perp chart here. And we're going to go to the Binance chart. By the way, I will be on TradingView at 3 o'clock today. I'm going to, keep that on the schedule. Okay. And I'll stream, I'll probably stream most days this week, but I most likely will take Friday off of this week. Okay. And all of next week off. I need to take some days off. I have a lot of work to do, and this is definitely, not showing any results. So anyway, so let's take a look at this here now, and let's see what we can get out of this. So we have 10 minutes to evaluate this or see if this thing gives us any kind of setup. Now you may say, well, what about this? Wasn't this a long? Well, yeah, but that's not the best location because you're looking at 5-minute supports here, okay? This is a 5-minute support. You can't rely on 5-minute supports. You have to go to the 30-minute. In fact, I'm just going to go back to the 30-minute on this perp chart, right? So just so I could draw a line on it, right? Now, if you notice, I'm just using very simple notations like horizontal lines and rectangles. That's all I'm using. I have nothing else on my charts. If you like to fool yourself and you like to use nonsense, there's thousands of oscillators that you can put on your chart. But I can tell you right now, you're just wasting your time. So I'm only interested in levels, and I'm interested basically as a day trader. There are 3 steps out of my 6-step process, right? We have trend, levels, and setup. That's it. So the market needs to align with those 3 things. It's that simple. And then, of course, I do consider context. Context is not one of the steps. Context is something that you should be familiar with before you even get to the decision-making process of taking a trade or putting on risk, right? So we get context by looking at the bigger picture and all that kind of stuff. But when I say bigger picture, I mean for a day trade, bigger picture is 30 minutes, 30-minute chart. And that's where the levels come from. So location, right? We're not there yet. I want to see a test of that. We get a test of that, that's a potential long, all right? And we'll see how that goes. Now, as far as the shorts, like I said, we know where the short levels are, right? We basically have, look at this. Just even on the 5-minute chart, when you zoom out like this, it gives us the same levels as the 30-minute. Look, let's just compare, right? Here's the 30-minute. Look where that 5-minute allowed me to draw. It's not the chart itself, it's the data. It's the amount of data that you're looking at, okay? The 5-minute just zooms us into more detail in this area. But if I zoom out on that chart, I'm basically looking at all this data. That's what matters, right? The 30-minute just zooms me out so I can see the data, all right? So it's not about, do you need to look at both at the same time? No, I just need to know points of reference. And the 30-minute allows me to do that more efficiently. All right, so we have our plan. We have our levels. Now it's just a matter of letting the market align. Now, this is the hardest part, actually, because a lot of people don't have the patience. They just want to react to things, right? They'll see a candle, they see this, they see that, and they want to react, especially if you use one of these platforms that has a lot of stuff going on in it. The purpose of all that stuff is not to inform you, it's to stimulate you. Understand that. I've talked about that a million times. The industry is not here to help you. It's here to help you trade more because that is how they make money. Now, it really pays to understand how the industry works and where you fit in as a retail trader. The retail trader is the one that makes everyone else rich. The retail trader doesn't make any money. All right. The industry depends on retail traders coming in and putting on trades. That's how this industry works. Now, does it have to be that way? No. If you inform yourself and you understand where you fit in, then you can increase your chances. But always remember, as a retail trader, there's absolutely no advantages anywhere. So we have to rely on, or I like to rely on, the temporary advantage of behavioral, the behavioral aspect of the market. Now, Bill put some nice stuff in the free area of the Discord channel, the Discord server, there's a channel called Learning Resources. And there's a lot of valuable information in there about like the academic side and the stuff that I talk about that no one else talks about. One of the reasons why people won't talk about this, fake gurus in particular, is because a lot of these theories and a lot of these ideas refute the gimmicks that they're pushing on you. So if they're going to talk about, efficient markets, and you grasp what efficient markets means, you will realize that things like RSIs and moving averages and all other garbage offers absolutely no advantage. Meanwhile, they just finished telling you that, the RSI gives you a 95% chance of doing this and doing that and blah, blah, blah. And it's all fake. It's all nonsense. If you understood that theory, you would realize it's all nonsense. That's why they don't promote that stuff. It's not in their best interest. So why do I promote it? Well, because it's reality. And I teach you how to navigate these markets from a realistic perspective. Is it impossible to make money as a day trader? It's almost impossible, but it's not impossible. That's the thing. It's very hard, but it's not impossible. The biggest skill, if there's any skill, is really managing your risk. And the biggest component of managing your risk is patience. It's waiting. Okay, now look at this. We have an inside bar, okay? A sell signal is about to develop on this thing, but I'm not going to take it because this area right here is not an ideal place to go short. All we're doing is overlapping. Now the NASDAQ is just sitting on its low, okay? So that just tells us weakness is expected to continue, but that weakness may stop when Bitcoin reaches this support. I don't know. So the location is what carries the weight, not the signal. Signals are random. So you need to understand, you need to get used to that word random, because you're going to deal with it a lot here. Most of the time things are random. As a retail trader, I say it's optimistic to believe that you'll be wrong half the time. Think about what I just said. It's optimistic to be wrong half the time. That's 50%. That means the other half of the time you'll be right. So 10 trades, 5 of them are going to be wrong. That's if you're at a 50% win rate, okay, which is random. You may be worse. Now, on top of that, you always have the cost. So if you trade a lot, the cost is a major factor that you have to compete with. That's why Forex traders, these people that claim that they make money as Forex day traders, if anyone is lying, most likely it's them, because the spreads are they make the game almost impossible on the day trade level, the day trade time frames especially. It's possible, but it's someone that's been in this game a couple of months or a couple of years, chances are they're lying to you, okay? Especially when they show you P&Ls like on their phone. Oh, look at my phone. I made $10,000. I can show you how. Anyway, all of you know that. I'm just saying this for the people that may be watching this after the fact. All right, so there's nothing to do here. We got a couple of minutes. There's nothing to do here with this Bitcoin day trade situation. There's just nothing to do, right? It's not at any of our levels. Yeah, we're going to get setups inside of this mess. We're going to get setups, but you cannot get involved because it's highly random and it's just not worth it. You want to stack probabilities in your favor. The little advantage that we have, we want to stack that in our favor. And hey, Kai, how are you? So when it comes to that, right, and stacking those probabilities, what is it that we're capitalizing on? What is that? And it's the mistakes of others. So if Bitcoin can get into this area right here and it reverses, what's going on there is you have all the short breakout traders, okay? Everyone that follows all their breakout nonsense and blah, 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 and they all get short. They get short into an area that is an area where there's likely a lot of buying activity, just waiting to get in. So when you get something like that and the market's not really a short, all those shorts have to cover. They're going to get squeezed. And that's usually why you get the bounce off that area. Now, how far the bounce goes, that's another story. But that's initially the concept that we are capitalizing on. So it's the mistakes of people who overreact. Same goes on the long side. They all get long up here at the top because they think it looks safe, and then the market turns on them. Now, you can't play that game in a strong trend. I'm just giving you the concept. Okay. Which market instrument has the lowest fees per trade? That's a good question. Hey, Levant, that's a very good question, Bill. Which has the lowest fees? Well, forget Forex is all pretty much the same, right? Each broker kind of, they say, oh, we have zero spreads or we have the smallest spreads. You can explore that route. Like 8Cap has raw spreads, but then they charge you a little commission on top of it, which makes sense if you're going to be throwing around larger positions because it's a smaller spread, but you're paying more like a flat fee instead of, you know, a spread which takes a larger percentage out of your, it's a larger cost, right? If you put on like 3 standard lots and you have to pay a 2 pip spread on that, that's a lot of money. Okay. So forget Forex. I mean, I would say the lowest you'll find for day trades, lowest cost are futures. You'll find futures like S&Ps, futures brokers. They can be as small as like what, 84 cents or 85 cents per trade. So it's like $1.60 round turn, that kind of thing. You can find stuff like that. Interactive brokers tends to be also very competitive, but yet you have to look around. But it's really in the futures markets, the index futures, where you'll find those smaller, lower fees, typically. Okay. Account size plays a big factor. It can. It can, well, it's not really the account size, it's the volume that you generate. If you generate a lot of volume, sometimes you could work something out, but it depends. Like a Forex broker won't work anything out with you. They'll just say, well, we have these, we have these raw spreads, and you could use those, and that'll lower your cost. But it's going to depend on the broker and how much size you generate. They usually won't even talk to you unless you're throwing around like 1 million contracts or like 1 million shares a month, like something like that. Like they want something ridiculous like that for you to even start getting any kind of leeway. That's usually how it is. Okay. And they're also in the stock world, you can find some flexibility in the stock world as well if you day trade stocks. Okay. But I don't actively day trade stocks. Not right now. I'm more involved in the futures. I swing trade with the stocks. So cost, when it comes to cost, swing trades are much less cost heavy. Understand? Like there's going to be less of a problem because you're only going to trade once or twice a week or something like that, right? That's a busy week for swing trades. That's going to be minimal cost, but it's day trades that can really add up. Okay. Binance Spot BT. Well, nothing is free. Nothing is free. They have you fooled. Nothing is free. Binance Spot Bitcoin is not free. There's a gimmick somewhere in there. It's not free. So they probably give you, what they probably do typically when they say it's free, what they do is they bake it into the price. So basically, if you're buying like Binance Spot, right? Typically what's happening is you're paying a worse price than you would on another exchange. So you're paying it, it's just invisible and you don't realize it. Okay. So you're actually losing money because if you had the opportunity to trade at another exchange, the price would be better. Okay. It's about the broker. The lower and more fair the fees, the lower leverage and the higher margin requirements. That's true, Kai. That's another good point. That's another good point. They want, there is a balance with that. Okay. And higher margin requirements obviously means you have to have more money and you can't trade the same position sizes. Okay. So that's something to keep in mind. But yeah. Okay. But whenever someone tells you something is free, they're lying. There's no such thing, right? Educate yourself. Payment for order flow. Read up on that. Because I mean that, I don't know how common that is in the Bitcoin and altcoin world, but I'm sure it's there because again, there's no rules in this game on that side of things. But in the stock world, they have this thing called payment for order flow. So the broker comes out like Robinhood and says, "Oh, we have commission-free trades. Come over here and blah 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 blah." They're not commission-free, but they advertise that they are, but they're not, because the market maker gets you at a higher price than you normally would pay if you were going straight to the exchange. So they make a little money off of you. It's not free. So how do you lose? Well, because you should actually have more profit or whatever than you're getting, or a little bit less of a loss than you're getting when you're getting in and out of your positions. Okay, so yeah, well, true, right. Well, if the bigger money you have, the larger account, the more flexibility you have, right? So someone with $100,000 in their account is going to have more flexibility than someone with $10,000 in their account. That's the way it is, you know. So yeah, but these kind of things, as far as like retail trader cost, usually you don't have any negotiating power. Usually none. Okay. It doesn't matter if you're good. It doesn't matter if you make any money. What they want is volume. So you could be the worst trader in the world, but if you generate 1 million contracts a month or whatever, there's some leeway in there. Someone will work with you somehow because they're only interested in the volume. They could care less about your outcome, right? That's how this game works. All right, you guys. So I'm gonna wrap it up there. There's nothing going on here. There's nothing worth talking about. We're going into the holiday season. I will be back on TradingView at 3 o'clock, and we'll talk a little bit more about some of these things here. But again, just as a reminder, I'm going to be off all of next week. No streams, okay? So don't go looking for me. Well, don't start thinking I quit or anything. I'm just taking that week off, okay? So no streams the whole week next week. So I'd rather get buried to make money with little starting capital. If you have a successful trade, the interest you pay in your position is very high. Well, right. Well, that's another thing, Kai. It depends on what business you're in. Like it depends, like Forex or right, or not what business, what country you're in, right? Because you're going to have to pay right on your gains. You have to pay on that too. Keep in mind, right? People never consider the government, but the government's your partner in this. So I usually get this from people like in the Eastern European countries, where they have these ridiculous taxes. And then they're always asking me like tax questions about, well, if I do this, it's going to be a tax liability. Man, I don't know what to tell you. You need to move out of that country. I don't know what to tell you, but they make it almost impossible. When you factor the government in, make it it's almost impossible. Okay. Okay. Yeah. But yeah, especially like in Forex and stuff like that, and you have to pay taxes. But taxes are something you have to pay no matter what you're dealing with, right? So the government is a factor, something you have to keep in mind at times. And it's worse really for people in these countries that have these ridiculous tax schemes or whatever, these socialist tax schemes, because that's what they are. You can't get anywhere when you make a trade, you make $1,000 and you owe the government $500 now. I mean, that's kind of ridiculous. All right. Anyway, but I'm not here to talk about government tax structures. All right. So that's right, Kai. But like I said before, the retail trader is here to make everyone else rich. The industry depends on the retail trader to thrive. That's why fake gurus are so well embraced, and fake gurus will always be around as long as the retail trader supports them, because the industry loves them. It doesn't matter how dumb or how smart they are. They're basically like a free sales agent, right? That just gets paid on commission, nothing else. And they just bring in business to the brokers, to the exchanges, and to anyone else. That's how it works. And they bring in these retail traders. That's why everywhere you look everything is infused with hope and dreams, right? They encourage everyone, as opposed to like the topics I bring up, like efficient markets. No one talks about efficient markets because it refutes all those gimmicks. Like I said before, no one wants to know about efficient markets, but it's a theory and it's true. Okay, the more efficient markets get, the worse this is going to get. And I don't see how markets are going to get less efficient in the way technology is moving. I mean, a great example, I know I got to wrap this up, but a great example is look at the open outcry markets. Okay, open outcry was the way is how business was done for like over 100 years, right? Especially in Chicago, is like where like the base of that was. And guys, street guys, regular guys used to be able to go in there and make millions of dollars. And then the computers took over, right? Efficiency took over, and all that money was gone. That's why open outcry is now obsolete. Why? Why? Because efficiency, right? All that extra money that was floating around that these guys were able to make because they can basically be inside the market and take advantage of all this inefficiency, right? That money has been now removed by the algos, right? And that's why electronic markets, they say, oh, they're better for the investor. Maybe for the investor, maybe over the long run, but not for the trader. It's the worst thing in the world. Okay. Same thing with like electronic day trader. Like when I started out, it took all the skill. There's no skill in this game as a result of that, right? And it made the game basically a random game, where at one time this was not a random game. You could learn how to be a market maker, and you could learn how to make a market and actually make decent money, good money with that skill. And that's how I started out in this game, like that. Okay. And I saw the money, I saw that extra inefficiency money that was made, that the algos removed from the system. So if you want to be mad at anyone, be mad at the politicians and the big boys, right? The institutions that basically saw all that and took it away. That's how it is. Okay. At one time, you could have went into a market and became like a market maker. We had the same priority at one time. Forget those days now. That's just not happening. Right? The more efficient we get, the worse this is going to get. It's just going to be more and more random. I mean, at some point, I don't think it could get any worse. It's just going to be a random, 100% random or 99% random. And the only thing, again, we'll be able to capitalize on is mistakes, right? Human emotion, mistakes, overreactions, things like that. The same things that I'm capitalizing on now. I think, though, as long as people are still involved in the markets, and as long as emotion still drives price, there's opportunities. Now, what if everything was 100% algo, like all robots? Well, I believe that in that situation, robots are not perfect. They make mistakes as well, right? So we would have to learn how to capitalize on robot mistakes. Robots can make mistakes that a person, would not make. Like if a robot is losing tons of money, it doesn't care. It just continues to do its instructions. It follows its instructions, right? Until a human comes in and says, oh, I got to turn this thing off. So there are mistakes like that. For bots, humans will have to flee to higher time frames. Well, that's the case now. But it's possible to capitalize as long as people still trade, right? As long as you have droves and droves of people, as long as you have places like Robinhood exist and these Forex brokers, yeah, as long as you have retail traders, there is a source of profit, okay, that can be capitalized on in some repetitive way, I believe. If we go all robot at some point where there's just no people at all, I mean, I don't know. I would imagine there would be some sort of inefficiencies in there somewhere. Like case in point, I know you guys got me talking now, but there's nothing to do here in the market. Think about this, for example. Back, 20 years ago, stocks were in fractions. Stocks were priced in fractions, okay? They were priced in fractions because at one time, that was an efficient way to price stocks. But when the internet came along and technology started to become more efficient, that fractional pricing became an inefficiency, which was able to be capitalized on enormously. I know because I was making a lot of money because of that fact alone. Fractional pricing. Once they took that away, party was over. That was a big, big thing, right? So my point is, at one time, fractional pricing made sense. I guess with open outcry and blah, 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 whatever, it was just a faster way to communicate pricing. But then it became obsolete and inefficiency. So the technology that we have now, right, whatever algos are doing now, as they evolve, inefficiencies, things that are working now may become obsolete. And there may be other inefficiencies to capitalize on. Of course, they'll be temporary, but something else will come along, like, again, fractional pricing, which we were able to capitalize on for a couple of years, until they turn everything into decimals. Something right now will eventually start to become obsolete, and there will be inefficiencies, right? I don't think you can have a perfect market without any inefficiencies at all. There has to be something somewhere, even if they're temporary. And right now, I think it's primarily a behavioral thing, okay? And behavioral, here's the great news about behavioral inefficiencies. They've always been around. As long as people are involved in this game, they've been around. And as long as people continue to be involved, they're likely to be around, okay? Another thing too, another area, if you can't play this game anymore, is options, because options have a built-in advantage, with time value of options. That's something that so far the computers haven't been able to take away, okay? And maybe there's some physical reasons for that, I don't know, but time value of options is a way to make money, and it's an advantage that if you understand how it works, it's possible. Of course, there's a lot of risks involved in that area too, but that's one thing that where you can really stack probabilities in your favor and have things more likely to work your way is with that, okay? And with all the advances we have today and all the technology, that still exists, okay? Just like it existed 20 years ago, it still exists. So anyway, okay. All right, you guys, that's enough of me talking. But will not allow you to exceed that easily. Okay. Yeah. A country often praised for its social security makes you pay up to 100% tax. Yeah, Denmark. Yeah. Need to move out of Denmark. All right. Good options course could be interesting. Well, yeah, options is something I've been thinking about that, because options are really a great way. There's just so much flexibility. I'm a big believer in options. I trade options. I don't trade them here, obviously, but I keep it very simple. Okay. Of course, I work with the time value stuff. I don't sit there. Oh, I'm gonna buy a call option for 5 cents, and I'm gonna watch it go up $5. I don't play that game. That's nonsense game. That's for morons. Okay. Well, there's lots of options information, tons and tons and tons. If you look, that explain. The thing is, it's complicated, and it could be intimidating and hard to follow. That's where the thing is. Like, you really have to understand. First, you have to grasp the concepts, and then you have to know how to put them together in a way that are simple, right? Like JP Trader, he does that too all day long in the active investor room. I mean, he trades a lot of options in there. Some he does straight calls and puts, but most of the time he's talking about covered calls and naked puts and things like that, taking advantage of time value. It really stacks probabilities in your favor. Okay, I'm not here to promote options, but the point is, yeah, I think there's still a future in options. Okay. Okay, anyway, but yeah, I'd like to get into that at some point, offering some more training on that, because that's definitely a sustainable area. Okay. All right, you guys, I got to wrap this up. I'll be on at 3 o'clock on TradingView again. I hope you found this helpful. There's not much to talk about here as far as trades, okay, which I expected. But all right, so you guys remember my schedule changes for this week, and I'll remind everyone again at 3 o'clock. All right, so enjoy the rest of your day, and hopefully I'll see you at that time. Otherwise, enjoy the rest of your day, the rest of your evening, wherever you are in the world. Thanks for watching.